I remember last time you saw like, oh, Bitcoin has failed, gold has failed, everything has failed. That's not the case, right? They often, especially in like gold's case, for example, you see this V shape, right? Because there's people who have been patient, they have dry powder, they will snap up that capitulated gold, or maybe in this case Bitcoin, from the forced sellers, basically forced sellers, right?
One more time. Welcome back to Bitcoin.com's The Weekly, where we recap and digest the biggest stories in the Bitcoin and cryptoverse. My name is Graham Stone, and I'm joined by David Sensel. And this week, we've got Liberation Day fallout, murmurings of a Bitcoin decoupling, bullish statements from TradFi titans, and the unrelenting march of institutional Bitcoin and crypto adoption. Before we get into it, if you like this content, don't forget to follow us and smash that like button. Also, light us up in the comments. And don't forget to subscribe to David's weekly newsletter, which is entirely free.
Yep.
And which you can find at Bitcoin.com. Just enter your email. It contains a full weekly download of David's autistic gigabrain. Well worth the less than 5-minute read per week, I would say. All right, let's get into it. Liberation Day fallout.
All right, so April 2nd, the Trump administration announced a new tariff policy with a baseline 10% across the board and additional reciprocal tariffs based on trade deficits. The U.S. weighted average tariff rate is expected to be 23 to 27%, and this is notably higher than the infamous Smoot-Hawley Tariff Act of 1930. Jim Bianco, who is amazing, everyone should follow him on X, posted a chart that really provides a great visual and puts this current new tariff regime into historical context. Now, this is if for those looking at the chart, you see kind of for those that aren't looking at the chart, you see just kind of downward graph and then a sudden spike that just looks insane. Now, this is if the current tariff rates hold. It'll probably not hold, but it'll still be historically kind of significant. Now, markets dumped after the announcement, with the Dow falling 1,600 points, like initially, and crypto sunk 5%. We've since had more, obviously. And the current poly market odds of a U.S. recession have jumped from 39% before the announcement to 62% as of this video. Okay, Jim Cramer has warned of a possible stock market crash similar to 1987's Black Monday. And obviously he thinks this is because of Trump's escalating tariffs and maybe counter tariffs that are going to come, and the recent market volatility. Monday is upon us here in Asia. Everyone's looking for the American session. Will we have Black Monday V2? I want to find out. So do you. JP Morgan. Yeah, can't wait. JP Morgan echoed concerns, warning that the tariffs could lead to a U.S. recession and global economic instability. Again, we'll probably find out more this week. And Trump criticized Fed Chair Jerome Powell, urging immediate rate cuts. He's been doing this for quite a while. This is just the latest of public kind of cajoling by Trump to get some cuts. The next meeting, FOMC meeting, will be in mid-May, so all eyes on that. Meanwhile, Bitcoin has dropped from over 84,000 on Friday, holding up pretty well, but over the weekend it's below 80,000. It's Sunday now in America, and it's not doing the greatest. So, Graham, significance of all this?
Okay, well, I think it just has to be said that this, as you mentioned, right? This is a major shakeup. It's a realignment. It's a reimagination of the global economy. Now, as we have a quote here from Jim Bianco. He says it's an attempt to realign the global economy that comes around a few times a century. And David, you dug up the one from Scott Bessent. This is transformational for the American economy, for the American worker, and for the new Republican alignment. And it's a combination of old and new ideas. So big things happening. It's a huge moment here. We're only just seeing the start of how it's playing out in the markets, which the immediate reaction is dump.
Liberation.
All right. So I think the question that is really on everyone's mind is the Bitcoin decoupling. How did Bitcoin perform in all of this? So obviously it has performed surprisingly well. All right. The stock market is down a lot and Bitcoin is down a similar amount. But as we've seen in the past, usually Bitcoin is swings more in both directions. So when the stock market is down a lot, Bitcoin is down a lot more. But so far, it's been holding up pretty well. So this has led to a sort of wave of commentators opining on the decoupling narrative. So, for example, we had Corey Bates, who's a Bitcoin advocate and market commentator. He says, this is actually wild to see. For the first time, Bitcoin is decoupling right before our eyes. And we had Eric Weiss, founder and chief investment officer of the Blockchain Investment Group. He says, as the tariff war escalates and stocks bleed, Wall Street will eventually realize there's an alternative, Bitcoin. No earnings risk, no geopolitics, just math. The moment capital truly pivots, BTC doesn't just hold up, it outperforms dramatically. And then we've got a few statements from some OGs in the Bitcoin space. Paolo Ardino, Tether CEO, says simply, Bitcoin is the hedge. And then from Michael Saylor, the biggest Bitcoin bull there is, he says, capital faces dilution from taxes, regulation, competition, obsolescence, and unforeseen events. Bitcoin offers resilience in a world full of hidden risks. Now, before we talk a little bit more about the significance of this, I just want to say that it's not actually the first time that Bitcoin has uncoupled from TradFi to an extent. So the last time I think we saw this was March 2023. If you'll recall, there was a banking scare. Regional banks sort of unraveled. We had Silvergate, SVB, Signature. Those were the high-profile casualties. And while that chaos unfolded, Bitcoin went the other way. It climbed something like 35% in that period, which, you could argue reflected a flight from conventional finance. So it's not the first time.
Yep.
David, you want to weigh in here?
Yeah, take some deep breaths, everybody. It's funny. I feel like you've seen hyperventilating on one side, saying that the sky's falling, and then just listening to you rattle off some of these quotes from people, it almost sounds like they're hyperventilating in the other direction, So don't follow Michael Saylor's advice quite yet. Don't sell your children or your kidneys, to buy Bitcoin. And I think that, the asset has held up very, very well. But just remember that if we get like some kind of liquidation cascade, some waterfall down in traditional markets, that maybe will happen in a Black Monday type situation. What you often see is the assets that have held up the best up to that point, for example, traditionally gold, they often sell the hardest and the fastest during these fast moves down. And the reason that this happens is because they've retained their value. They're liquidated first to buttress the other failing positions. And you saw this during the COVID crash. You've seen it in the past, and I'd expect Bitcoin and gold to lead that crash as those positions are. Go ahead.
Yeah, so it's just like if you are holding an asset that hasn't dumped as much as your other assets in your portfolio, and you're thinking, okay, now's my chance to like at least get a little bit out of this. I think that's the psychology behind why that might happen, right?
Yeah, but also like I remember last time you saw like, oh, Bitcoin has failed, gold has failed, everything has failed. That's not the case, right? They often, especially in like gold's case, for example, you see this V shape, right? Because there's people who have been patient, they have dry powder, they will snap up that capitulated gold, or maybe in this case Bitcoin, from the forced sellers, basically forced sellers, right? So don't be surprised if that happens. Second thing, though, is I just see so much short-term thinking and panic, and like you mentioned above, kind of happiness. People just need to take it easy. It's only been a couple trading days for this tariff business, so we kind of need to really at least take a midterm view of what's happening and not react to every single story and movement like an animal, like some kind of dog.
Absolutely. And, with the tariffs, there is still a lot of uncertainty here, right? We were presented a plan, but I think some countries have already negotiated. Things will change here. So there's still a lot of uncertainty about what tariffs end up sticking. It's still early.
Now, Graham, things are starting to look a little dicey. You have the market falling down. A couple weeks ago on Token Narratives, you said something that I thought was great. It very kind of quote worthy. You said that if Bitcoin goes down a lot, it will be a rare opportunity to buy Bitcoin, and you should do it, quote, with both hands. Do you still stand by that? Buy Bitcoin with both hands.
Well, I stand by that. However, I will caveat, of course, when it's easy to say that at the time, but when you actually are seeing a massive sell-off, blood in the streets, it's hard to press the button. But with all of the bullish news we've seen with institutions, the Bitcoin strategic institutions adopting Bitcoin, the Bitcoin Strategic Reserve, global
businesses
uncertainty,
buying,
and businesses buying, but the Bitcoin corporate treasury narrative. Bitcoin has such a limited supply. Also you've got a large contingent of the Bitcoin holder population just being like, no, I won't sell. Like most, so it's. The downside is limited here, and it does seem like a massive opportunity. How about you, David?
Yeah, I mean, I agree with it. I quoted you in my weekly, and I thought you were right. I'm probably not going to buy with both hands, but I will with one hand. Hopefully, my hand will be shaking though as I buy. But yeah, I agree. 100%.
Yeah. Take a bit of a stepped approach, a DCA approach, maybe. Don't put all of your, because you don't know how far the dip is going to go. I think we've got a pretty interesting story here. Could you line this one up for us, David?
All right, so this is a story from Larry Fink himself. It's a letter, and if you don't know who Larry Fink is, he is the crown demon prince of BlackRock. In his annual letter, Larry Fink has seemingly gone full Bitcoiner, but I mean, full Bitcoiner from like circa 2015, not the Pompliano mattress selling Bitcoiner. He says USD could lose its reserve status to Bitcoin. Quote, if the US doesn't get its debt under control, if deficits keep ballooning, America risks losing that position to digital assets like Bitcoin. Again, very bullish quote. He's also bullish on tokenization. He says, quote, it will revolutionize finance. He stressed that while tokenization and DeFi present promising advancements, their success hinges on regulatory adaptations. Yeah.
Yeah. So, okay. I mean, come on. The CEO of BlackRock is saying a Bitcoin talking point from like 2015. It's watch out, U.S. Fed. Watch out the government, because if you don't get out your debt under control, people are going to stop buying treasuries and instead start buying Bitcoin. That's what the CEO of the world's biggest investment bank firm is saying. Pretty incredible stuff.
Yeah, but also I don't think that they or any institution is going to stop buying treasuries anytime soon. So if it happens, it'll happen slowly. But yeah, this is definitely very, very bullish.
We've got one more really bullish story here this week, which is that Fidelity, another large institutional player, just launched a crypto IRA product. Fidelity is the world's third largest investment manager with nearly $6 trillion in assets under management. Now, for those not familiar with the nuances of individual retirement accounts in the U.S., basically they allow people to purchase assets on a tax-deferred basis. So I think there are two types, right? So one is the traditional IRA, which is you basically, when you buy the asset, you're getting it's a tax deduction. And the other is a Roth IRA, where you can't deduct it at the time of purchase, the cost, but when you go to liquidate it, as long as you're past retirement age, you won't pay any taxes on the capital gains there. So what this does, right, with a business like Fidelity making this available to their, I got to assume, millions of clients, millions of people have Fidelity accounts, it makes it easier than ever to get exposure to Bitcoin. It's a huge carrot. And by the way, the assets that they're currently offering are Bitcoin, Litecoin, and ETH.
Good Lord, Litecoin. I think of those, though, like, this to me makes the most sense, kind of a way to hold Bitcoin, because you really want to think of it in a longer term perspective. If there's a theme of this show for me this week, it's kind of get away from this short term thinking, right? And if you're buying Bitcoin for retirement, I wholeheartedly endorse that, right? It's a obviously long time horizon, and that I just can't see that not being profitable. So this seems like an awesome product to me. But don't buy Litecoin. That's insane. What a weird, messed up thing to offer. Yeah.
Okay. All right, that's it for this week, folks. Keep your eyes on the charts and your fingers on the buy button with both hands.
Do you feel decoupled?
Thanks for listening. We're out.